Recently, I discovered that 40% of my total profit comes from just one of my 5 entry models. And after looking back over my last 4 years of live trading, I noticed that this entry model actually had an 80% win rate. And the best part, this is probably the simplest pattern that I trade, which means that I can give you a full masterclass in this one YouTube video. When you think of the best price action you can possibly imagine, what do you see? I think a lot of people will probably imagine a huge trend. And entering within a huge trend is great, but the best place to enter would be at the very beginning of a trend. But how do you predict the beginning of a trend? Let me tell you. There are a bunch of different formations I trade which anticipate the beginning of a trend. There's liquidity sweeps, there's V followed by a range, and there's channels, which is the most accurate of them all. Even non-traders have heard of ascending and descending channels. It's an infamous pattern that has been around for decades, but it's often overlooked because traders love to feel clever by overcomplicating their strategies. Have you ever wondered what makes channels so high probability though? Well, let's dissect how a channel is made. In an ascending channel, you see price breaking higher and immediately retracing, which shows weakness to the upside, as bullish momentum cannot be sustained. This repeats until eventually price reverses at an institutional level, during a market open, or during high impact news. The longer the channel, the more breaks and retraces, the bigger the reversal. It can be difficult to predict exactly when a channel is going to reverse, but with my strategy, no prediction is required. And in a moment, I'll show you my exact entry model. You can anticipate when an ascending channel is ready to reverse if the candles are getting progressively smaller, if wicks are forming on top of the ascending structure, and if the length of the pullbacks are getting wider. Price literally shows you that it's getting ready to reverse. So now we understand the basics of what makes channels high probability. We understand why and when they reverse, but where is the best place to enter them? How do we capitalize on this pattern? Personally, I enter with a pending order. Following a clear shift in momentum candle, which acts as my reversal confirmation, I set my order for a retest at the most recent high or low. Pretty much exactly where traders that are entering with a market execution would put their stop loss, so thanks for the liquidity. You can probably get above a 50% win rate with this information alone, but there are some important ingredients that I have not yet mentioned. If you're finding this video insightful, I invite you to subscribe to the channel. I release trading videos like this every other Sunday. Let's make a sandwich. A reversal is made up of 4 key elements, and each of these elements will represent one ingredient in our sandwich. First, our sandwich needs some bread. It's arguably the most important ingredient. You can't have a sandwich without bread. And the most important element of a reversal is its structure. And as I said earlier, the longer the channel, the more high probability it is. So maybe our bread will be a baguette. In a channel, we need to see clear weakness in one direction. That means no momentum in the direction of our channel. We want to see consecutive breaks and retraces, sustained weakness. We also don't want to see too many breakouts, because if price is breaking and retracing on both sides, then that just suggests that price is going to be range bound. Then we're just seeing weakness in both directions. Finally, as I mentioned earlier, you can judge weakness based on the size of the candles, the wicks, if there are favorable wicks, and also by the length of the pullbacks. The next essential element of a reversal is the breakout, which will be represented by our sandwich filling, maybe a steak sandwich, so it's going to be a steak baguette. No sandwich or reversal is happening without the filling. We want to see a clear reversal candle, big-bodied with minimal wicks. It has to be much larger than any of the candles within the channel structure because it has to show us a shift in momentum. There are a few things we want to avoid though. After the reversal candle, we don't want to see any weakness, whether that's in the form of large wicks or a big shift in momentum candle coming back against us. For example, if our breakout candle is especially large, I'll wait to set my order so that the next candle doesn't tag me in all at once and show a shift in momentum back in the opposite direction. I would wait for a slower retrace to my entry level. Sandwich toppings are kind of optional, but sometimes they can make all the difference, right? So you can think of these as bonus elements to our reversal, with each one making our entry more and more high probability. All of our toppings relate to the channel structure's location. So there are three main toppings that I look for in a reversal. Does the channel have a larger directional bias? Meaning, is the reversal forming in the direction of an overall trend? Secondly, is the channel forming within a larger channel? So a smaller channel within a larger channel. Those always seem to be super high probability. And thirdly, is the channel moving into a liquidity area? If it has all three, you're setting yourself up for a very, very high probability reversal or a delicious sandwich. The only negative location elements I'd watch out for are taking reversals within or around ranges. I'd also watch out for channels moving into other channels because these signal a larger range. Ranges are just made up of smaller channels moving into one another. The last ingredient will be our sandwich sauce, which I would say is another non-essential ingredient, and this will represent the timing of our entry. I won't lie, I haven't really put a lot of weight on this until recently. My good friend Nico has been researching which days of the week the weekly high or low is most likely to form on, and although this is still in progress, the results so far are really interesting. If you take a look at this graph, you can see that over 70% of the time, the weekly high or low is most likely to form earlier in the week on a Monday or a Tuesday, which essentially means that our reversal entries could perform particularly well earlier in the week on these days. So with all these ingredients, or just the bread and filling, the structure and the breakout, I'm confident that you'll have a particularly high win rate with this strategy. I hope you found this video fun. The sandwich analogy should help with the information retention. Be sure to comment the sandwich emoji to show me that you made it to the end. And as I mentioned, I'm uploading free videos like this every other Sunday, so make sure to subscribe, and I'll see you in the next one. Thank you for watching.